everybody, and welcome to today's panel session on the future for junior mining investment. I've been really looking forward to it, and hopefully we've got a really interesting and insightful hour lined up for you. I'm going to be your host for today. My name is Lucy Crane, and I'm a senior geologist at Cornish Lithium. So I'm based down in the southwest of the UK, where it's currently very grey and miserable. Down here, we're exploring for lithium contained within geothermal waters, as well as for lithium and other battery metals in hard rock. I also work on business development with our CEO, Jeremy Rathall. And outside of Cornish Lithium, I sit on the committee for Women in Mining UK and the Young Mining Professionals in London. And it's something I really believe in, that we all need to be proactive about making the industry a more diverse and welcoming place to work. So, 2020 has been one hell of a year so far. There is so much uncertainty, both economic and political, and so it's no surprise we've seen a renewed interest in gold as people look towards something that we know, a bit of a safe haven. In addition, this global pandemic, I try not to talk about it too much, but it's impossible not to, has really thrust global supply chains into the spotlight, and it's highlighted quite how dependent we all are on China for many of our critical raw materials, or the processing of them. We're seeing a move in Europe and the UK, where I'm based, to actually investigate if we can produce some of these raw materials domestically if it's geologically possible. And there's also an increasing drive to kind of act now to combat climate change, and that's going to be incredibly mineral intensive. The World Bank estimate that we're going to need 500% more battery metals by 2050 than were produced last year. So the industry's got a lot to do in the next few years if we're going to be able to meet that demand. Fortunately, we have got a fantastic panel lined up for you today to discuss this. We all know that webinar fatigue is real, so we're going to keep this short and snappy and interesting. Please do ask questions through the chat function as we're talking. So that's enough from me now. I'd like to invite the panel to introduce themselves. First up, Michael, would you mind introducing yourself, please?
Sure. Thank you, Lucy. Hi, my name is Michael Danov. We're a single family office here based in New York. Traditionally, we've been focused on natural resource for last, I would say, 10 years. At some point, we were exposed to about 80% of natural resource and the commodities overall. Now we're about 30%, and we became more of a generalist. We're big on the gold, silver space. That's kind of our specialty, but we're opportunistic when it comes down to other industries. And we have internal background, operational background, C-level background as a family, so we are well equipped in that side, and we always look for good opportunities.
That's awesome. Thanks, Michael, and thanks for being part of today as well. Teo, can I introduce you next, please, or ask you to introduce yourself?
Sure. Absolutely. I'm Teo Dechev. I'm the CEO of Mundoro Capital. We've been focused on Eastern Europe, specifically the Balkans, and trying to develop new copper and gold opportunities. We partner with the major miners, and our goal is to create another, like you mentioned earlier, another great copper deposit for the European Union, which they can continue to extract and use. So we think there is so much wonderful potential in the European Union for more of these resources.
Yeah, absolutely. And people haven't looked at it for quite a long time. Thank you. Chen, please. Please, can you introduce yourself next?
Yeah, thank you, Lucy. My name is Chen Lin. I run Lin Asset Management, which is my family asset. I involve different commodities, and gold and silver are always one of my key areas of focus. And I'm taking position in different sectors at different time, opportunistically. And for example, in 2012, I was getting out of gold, and 2018, we're getting back to gold. So I also write a news article called chenpicks.com. Thank you.
Wonderful. Thank you very much, Chen. Willem, can I ask you to introduce yourself next, please?
Yeah, thank you. Willem Middelkoop, founder of the Commodity Discovery Fund, the only Dutch-based resource fund. We're specialized in the early stage companies. I'm one of the pioneers in discovery investing. So over half of our portfolio is exploration plays. We like precious metals, and over 70%, 75% of our portfolio is precious metals related. We also have some uranium investments, and the rest is base metals. And our fund grew from 50 million in March, $50 million to 150 million around this time. So
that's fantastic. Thank you very much. Jessie, please can you introduce yourself next?
Thanks, Lucy. Hi, my name is Jessie Chen. I am a director at Longstay Investment. We are focusing investing in financing energy and mining sector, and primarily in exploration, development stage, junior resources, and oil and gas companies. Thank you.
Brilliant, thank you. And then last but not least, Jim, please can you introduce yourself?
Hi, Lucy. Thank you very much. Jim Paterson. I'm a principal of Discovery Group and also chairman and CEO of ValOre Metals Corp. I started in the business in 1997 in investor relations and became a battered and bruised junior mining executive starting in 2010. And our group is sort of commodity agnostic. And we have projects and companies that are looking to advance mineral exploration assets globally. And so I'm looking very much forward to this panel, and thank you very much for the opportunity.
Wonderful. Well, thanks everyone for your introductions and for your times, and for everybody listening today. You know, this is actually quite, you know, we're all over the world. For Tio, I think it's still 5 o'clock in the morning. So thanks for your time for that. So let's jump straight in then. Willem, how does the outlook for junior mining exploration compare to this time 1 year ago? What do you think has changed?
Well, the big change, I think, is the window of opportunity towards financing. Yesterday, I asked our broker in Canada what position we had in his top 10 of deal flow. We do quite a bit of private placement. We participated in 60 private placements this year. Spent some 15 million Canadian dollar on private placements. And he said, well, last year in the downturn, you were number 1 in deal flow for us, and now you're number 8. I asked, what's the difference? He said, there's so many, more generalist people coming back to the industry now, people who have even, more money to spend. And, I think that's the biggest change.
Yeah, wow, gosh, that's quite a change then from last year. So, Jim, how have you found it?
To back up what Willem's saying, I think last year and previously it was apathy or fear, and now it's FOMO, fear of missing out. And I too get the emails, I think, from the same broker that Willem may receive emails and information on financings. And what I kind of caution people a little bit is that in the downturns, it's hard to raise money. So companies really have to prioritize, and their business plans and their exploration plans really have to make sense. But right now, in a sort of state of FOMO, everything's getting financed. That can lead to a train wreck down the road. So don't worry if you don't get into every financing. I think that the good companies and the good groups are going to allocate that capital very well to advance their exploration or development projects, and those will have good outcomes. And you can be pretty choosy. You can choose your groups to back and let the other ones go. Don't sweat it if you miss every financing.
So what do you think these companies should be focusing on allocating their capital on at the moment then? What are the wise companies looking at, Jim?
Well, if a project didn't work last year based on economics, why will it work this year? The price of gold certainly is going up, but in crazy inflationary environments, prices of all inputs may go up as well. So if a project doesn't make sense because of metallurgy or infrastructure or access, just because the price of gold goes up and everybody gets all excited and generalists rush into the market, it doesn't mean the project's any better, really. It's just easier to finance. So I think you just need to be careful. And the only way to do it, if you're not a real technical person, you do like many geologists that run companies are, like Willem knows the people. So he knows the technical people and has confidence in their credibility and their technical ability to advance projects. And I think that's the number one thing you can do if you're not technical yourself. Just focus on good people.
Yeah, do you have anything to add to that, Willem?
Well, I think you're right. And I've been in this industry first as a private investor, and then when I started the fund in 2008, and now so for 15 years now. So we learned which management groups we could trust, but we're discovery investors, and that makes it a little difficult because we follow the truth machine, which is the drill machine, and we look at the core. And once you see spectacular results, we do take investments even when we don't like the management. And look at the history of Robert Friedland. Everybody is applauding him now. He didn't have such a great name in the early 90s. And then he made a big discovery, or took, he took over a company who made a big discovery, and he did that time and again. And so management is important, but the drill core is even more important.
And as a geologist, that's great. All comes back down to the geology in the end.
Yeah.
So, and I will add that even though I sounded perhaps a little bit negative with the financing environment being so robust, what Willem's talking about is actually going to be happening right now, because companies have the money to drill projects.
Yeah.
So you're going to get just an onslaught of drill results coming in Q4 and into Q1 of next year. And if they're good, discoveries will drive greed and drive markets and bring in a whole bunch of people because they want to participate in that action. So the drill results that are coming are very important and could add a huge amount of value for our sector.
Yeah, it's definitely one to look out for. I know our team's keen to get back out itching in the field to go drilling again. Jessie, I'd be really interested to hear from your perspective how you think the market's changed in the last year.
Sure. So despite the ongoing disruption as a result of COVID-19, and compared to 1 year ago, we expect a bright future and positive outlook for junior mining companies. And going forward, I believe it will be a very busy year as a lot of global drilling activity was suspended temporarily. And actually, junior mining company will rock start early of this year and with really good financing. So because of COVID-19, there's a lot of restriction on the traveling, and also social distancing requirements are in place. So people couldn't get into the field. So we believe in 2021, it will have a strong rebound. So some programs that junior mining company couldn't conduct this year will continue in 2021. In terms of the junior financing activity, and we do see the level will continue to go up. And when we look at the number, the capital being raised for junior minings in quarter 2 2020, it was 1.85 billion. It's higher than the number in Q2 2019, which was 1.65 billion. So I do believe the number will continue to go up and investment will go into the junior mining space. And also I see a lot of merger and acquisition activity going on. And because of the COVID-19, we see the number of deals, the highest number of deals since quarter 3 2018. And so I do believe the number will continue to go up, especially for gold junior mining company. One of the example I really point out is the Barrick Gold and Anglo Gold have agreed to sell 80% interest of their Mali Gold in Mali to Mali Lithium for 22 to 27 million. So I believe the gold will continue strong performance, and junior mining gold company will be very hot in the next 12 to 18 months. Despite the current challenge, I would like to say the good management team will always find a way to make things happen. So I do feel very optimistic and confident about the future of junior mining company in the next 12 to 18 months. Thank you.
Awesome, thank you. And great to have so many stats to kind of back up the sentiment that people are feeling at the moment as well. So Michael, then, if you wouldn't mind answering, from your perspective, which exploration sectors do you think look strong at the moment?
So I'm pretty strong, I guess, between gold and silver at this stage. As much as I want to support the basic metals, it's a bit challenging to see how these things come out with certain cap access, and not so much success has been done in the last few years. But I am a big supporter of lithium. I do believe that space could grow more, but obviously with the pricing, it's getting challenging to find opportunities where it could be economical. You know, we invested in a few companies, and one is already in developing stage potentially. Either they're going to be sold or they need to raise the capex. But outside of those three, as of today, I think that's kind of where we see value, and probably get I think between gold and silver will get the most appreciation and potential upside for some of these opportunities for either mid-tier to do joint ventures or even acquisitions and etc. But that's kind of my 2 cents on the space and the opportunities in the exploration sectors today.
Yeah, thank you. And Chen, do you have any views on which sectors are looking strongest at the moment? Do you kind of agree with Michael?
Yeah, obviously it's gold and silver. I couldn't agree more. Basically, because the printing of the money around the world, the hard assets start to appreciate. But as you saw that gold and silver appreciate, all the other assets also appreciate. And you have a copper, zinc, and throughout, and also palladium has been very strong. Platinum, which is one of my favorite, also getting very strong. You look at there's Tesla, very popular, but there's a Nikola is coming, which is using hydrogen fuel cell. So if you want to really future vision, we look at it really the future. If hydrogen fuel cell takes off, they use a lot of platinum, and then platinum right now trading at half of the gold. So that's another opportunity come up. And if you look at the electronic vehicle, right? Electronic vehicle use a lot of copper, so that's actually helped copper. Silver has been particularly strong, very strong lately, but I think it's only the beginning. Historically, gold already hit the all-time high. Silver hasn't, pretty far away. And silver is use all these, for example, in photo cell, right? So you use that, but if you want to, solar panels. So if you want to put all the solar panel around the world and generate all these clean electricity, they use a lot of silver. There's a talk that still not enough silver if silver panel really takes off. So all these are different areas and different sectors, and I'm quite excited. And it seems to be this market come to wave. Gold come up first. Recently, gold in consolidation, but base metal is very strong. And then maybe the next wave, when the gold finish consolidate, they will base metal money will come back to gold again. Seems there's a lot of money in this commodity space, and they're pushing one wave and to the other. So it's very exciting time. I couldn't agree with other panel more. The next 12, 18 months will be very exciting for all the commodities.
Yeah, that's fantastic. There was a really good report that came out by the World Bank a couple of months ago that was the mineral intensity of climate action. And it talks about exactly all of those fundamentals that you're just mentioning then. If we want to combat climate change, we're going to have to mine a lot of materials over the next few years. So we've got a lot of finding to do. So that's fantastic. So we've avoided mostly talking about Corona so far, but the COVID crisis has really thrust international supply chains into the spotlight. And in Europe and the UK, where I'm working, which is why I'm talking about that, we're really seeing this increased drive to establish domestic supplies of some of these critical raw materials where it's geologically possible. Has this had any effect on the jurisdictions or companies that you're looking at? Theo, have you got any? Obviously, you're based in Europe or working in Eastern Europe.
It's a really interesting question, and there's kind of a lot of ways to look at that. Obviously, we're focused on it's kind of the western portion of the Tethyan Belt, which runs into Eastern Europe, and not a lot of attention has been given to this belt in the past. I think that the European Union, let's be frank, is late, right? I mean, these are policies that other nations and consortiums have put together since the late 1990s about making certain metals and certain industrial minerals as strategic importance to a particular nation. So Europe has, I think, started to evolve on what is important to us, what should we be mining internally. Obviously, the oil and gas sector has been a major catalyst in that thinking. COVID has elevated that analysis and that discussion, but the European Union is very slow. And one of their challenges is to counterbalance that with their Natura 2000 policy. So you have got some tremendously valuable natural resources that are actually overlaid by Natura 2000 policies, which restrict commercial production. So I think the union is trying to understand, well, is it a strategic importance to us to have a lithium deposit? So for example, I'm sorry, I haven't been following what's going on in the UK, but in Serbia, I mean, which is not part of the European Union. It's, a candidate to become part of the European Union. If the union wants to make these strategic policies, then there's going to have to be change in the legislature. in terms of how that affects the environmental side. So I think that it's going to take a long time for the European Union to get its head wrapped around what is a strategic metal, what is a strategic industrial mineral, how does that kind of play out with our policies on natural resources. So I don't think as a company you should be chasing what a particular union or a country is doing about strategic. You have to look at economics. You think, obviously we're really focused on copper and gold. Copper, fundamentally, if anybody believes that we are in the future of electrification, whether it's electric vehicles or city grids, that is a fundamental commodity that is absolutely short in supply, growing in demand. That picture is not going to change for decades. Small shifts will occur, but long-term, that's an impact. So we as a company focus on like real supply and demand, and obviously in jurisdictions where we think they can work. And then if those jurisdictions decide, hey, that's of strategic importance to us, fantastic. That makes the, the investment thesis all that much better.
Yeah, that's really interesting. And actually, we've had contact from somebody the other day who the European Union are in the process of writing their new industrial strategy, and they are now starting to think about whether actually maybe it does make sense to try and produce some of these things closer to home. There's also that fantastic stat, I know I keep quoting the World Bank, but that in the last 5,000 years, humanity has mined 550 million tons of copper, I think it is. And we need to mine that same amount in the next 25 years to, if we're going to combat climate change and transition to a low carbon economy. So there's a hell of a lot we need to find. Willem, do you have a view on this? Is this something that you're taking into consideration as well? And has your view changed in the last year or two? Well,
as an investor, the COVID-19 situation didn't change that much. Of course, first everybody was scared that maybe industries had shut down. Of course, we saw the shutdown of some mines, especially in Mexico. But since we focus on the exploration side, most of the exploration companies were able to continue most of their programs. So I think the result was that there wasn't that big of a change. Most of the major discoveries exploration companies working on, they continue. Great Bear Resources is a great example. We have large position in Australia. We can't travel there now, but well, it was too far away anyway. So we have big position in the grey mining, Greatland Gold, and all these drill programs are well, they're drilling non-stop. And so we're very happy that we survived this crisis pretty well as a fund. And of course, there's more and more focus on security of supplies, and we follow Theo in the thesis. We're investors in Mundoro as well. And I think the European Union is coming to senses, and they do understand now that we need mining also in Europe, and we can't just ship it from, well, all the other places around the world. Yeah.
Yeah, thank you. I think they're all really valid points. So let's move away from COVID for the time being then. Jim, this is a question for you. How do you find that technology innovation is changing the way that we're actually exploring?
I think it's changing it. I think just going back to the change in the capital environment, or the amount of capital that's now flowing around the sector, I think that'll be really good for innovation. And the reason why I say that is that when times are very challenging, there's a dogma in the industry, and you don't want to take risks in terms of exploration strategies or technologies, because if you fail, people will be quick to jump on you and saying, why did you do something that no proof would work when capital was so constrained? But capital is flowing into the industry. There's definitely some sort of institutional pushes to lead the industry in the right direction. But now there's more money to take risks on these, what you'd call science experiments. But I think it's incumbent upon us as players in the industry to look at other industries, because Jessie, you're following the oil and gas sector. Of course, they're in some cases light years ahead of the junior mining sector in terms of, they're drilling holes that are 5 to 10 times deeper than we're drilling. They're using technologies, gravity surveys that we would only dream of being able to do. Also, in terms of waste streams like recycling, these types of industries that are or processing or factories where they're actually using visual sorts, all these types of things are finding their way into the mining industry, into the processing of ores. So it's not only exploration. I think it's incumbent upon us to keep our eyes open into other industries and see what they're doing and will it apply, because actually I think we'll see that it totally does, and it will make us much more productive and efficient. And then also there's a whole bunch of smart people that are trapped inside universities around the world, and they're coming up with spectacular ideas, but they have trouble communicating and commercializing their ideas. But if you just go to any of the universities, they kind of have like a business development section within the industry, within the university. And you can actually go through and see what they've been working on in their labs. And absolutely, they have application in exploration and development and mineral processing. So we have to keep looking, and then we have to overcome the dogma about not trying something new, not taking risks. We have to incorporate it into our industry. So we're getting advances in geophysics, in geochemistry and mineral processing, and all that can be taken from other places. It's completely commercial in other industries.
Yeah, I mean, all of those are totally valid points. I think the industry's traditionally been quite, slow to adopt new technologies, and yeah, I think it's forcing people to open their eyes a lot more. So fingers crossed.
Well, it's due to a lack of capital. I mean, you can't blame people if they've got no money in their treasury. They're not going to try something completely different and make that huge leap. So, but now with more money coming back to the sector, I think you're going to see great advances.
Yeah, let's hope so, because there's that quote, isn't there? Definition of insanity is doing things the same over and over again and expecting different results.
Yeah.
So no, it would be great to see what happens over the next couple of years. This is a question for Jessie now, I think. For the investors on the panel, how has your investment strategy into exploration juniors changed?
So for long-stay perspective, we'll continue to focus on investing in a company with very good management team and good project. And this year, we renew our strategy and more bullish on copper than before. And we see the copper price continue strong bounce back and see the price move to a 3-year high Tuesday this week, and also as the strong demand from China, and so the supply constraint to support the price. And I believe it's a good time to invest in a copper junior mining company at this moment. And also before the COVID-19, we are not really focused on gold and silver because of the concern of inflation and also low interest rate environment. So we shift our interest to safe haven precious metal, gold and silver, and we see the gold price was reaching all-time high over $2,000 per ounce in August, and silver was jumping about $22 per ounce for the first time in 7 years, and rocket up to a 29.5 per ounce in August. So in the meantime, we will monetize our PGM investment as well. And we are very bullish on the uranium, as we see the market deficit this year is about 44 million pounds. And also the spot uranium price increased 30% year to date as well. And we see a lot of junior uranium companies spring up, and I see it's a good time for them to start and fill the supply gap in the future. Having said that, we will continue to be extremely bullish in nickel and also lithium, as we believe we are facing the electric vehicle revolution. Thank you.
Thank you. And Michael, I'd like to ask how your opinion as well on this.
Yes, I mean, we've been a little bit cautious looking at the junior space. We spend a lot of time on the producers and developers because we're kind of getting the same rate of return on investment and much lower risk. But at the same time, we've identified a few new companies just recently where they were spin out from a larger sort of mid-tier and developers, and they have interesting assets and have very high grades. So that's what we've been really focusing, looking for the juniors who have high grades, who could overcome the growth and be a potential takeover target in the next kind of 2-3 years, right? If it's a low grade, and then with the gold price, we're having the momentum now. Tomorrow, if it goes down the next few months, we want to make sure that they could sustain their business model not to shoot themselves in the foot like they did a few years back. But it's an important timing right now that most of them should not overthink how they're going to grow the business. They think they get the best value and sell it. It's getting the fundamentals, get to the right stage of the project, and then definitely sell it. Because if you guys recall, back in 2012 and 13, a lot of the companies were asking, too much for the price of what they wanted to do and to sell the company, and ultimately a lot of them didn't sell, and then obviously struggled for many years. So I hope the learning curve was good and was recent. So, and as long as the companies follow that pattern and be more realistic, I think that's where the opportunity is. And in terms of I think I'm going to still focus on the silver, the gold, because that's where we have the best knowledge. We will not stay away. We'll probably stay away from copper, just for different reasons, and a few other metals. But and like I said, I do believe lithium is a big opportunity, but we haven't seen too much M&A in that space. So I'm curious to see how that pans out in the next kind of 12 to 18 months. But that's kind of how we see the world today in that space.
No, that's really insightful. Thank you. So we've actually had some really good questions come in through the chat function just now. So I'm going to ask a couple of those actually. First one is, and actually Willem, I'm going to ask you first. Do you have an opinion on TSXV versus ASX listing for juniors?
Yeah, we have a strong opinion about that. And we also have said this before, we think it's crazy that in Australia, we have all these exploration companies who haven't had a serious discovery, but have 2 billion shares outstanding and have a valuation of 1 or 1.5 cent. And, it's we even get questions from our regulators here in Europe how we can have positions in our portfolio which have a price of 1 or 2 cents, because how can you take a company like that serious? So Australia has to understand that if they want to be taken serious in the rest of the world, the exploration sector, they really have to clean up their system.
Does anybody else have a view on listing different jurisdictions for juniors?
Yeah, I would agree with William 100%. It's been a struggle and nightmare to see opportunities in Australia. And, I never understood the concept, dilution and getting to that 2 billion shares and how do you create value. So I never understand. Maybe for local investors, they benefit somehow at some point, but as a foreigner, it's very hard to find opportunities there. And you probably could count on 2-3 hands, top 20 companies with above dollar share price and so on, maybe. Versus the venture side, it's the traditional, at least, you could come in at early, pricing, but you hopefully see an uptake in growth, and then, companies could actually have a real shareholder value versus unexpected $2 billion shares outstanding, right? So, which is very.
If I may add one point, because I was very negative on the people down under, but there's also a lot of criticism to be made on the regulators in Canada. Because insider trading is not enforced very seriously in Canada, and I think it's a disgrace the way insiders trade their shares and their companies, and this could be possible in Europe. And I think the Australian regulators are much more serious in that respect.
Yeah, thank you. Okay.
Just one quick to add, with Australians, sometimes they have rights offering. That's actually very difficult for foreigners to participate. Usually they come down much lower price. So for outside investors outside Australia, tend to be a disadvantage. So in general, try to stay away from Australia exchange, and plus the time zone difference.
The time zone difference. Yeah, no, that's really interesting. And I know for a lot of juniors as well, as you were saying, when capital has been so constrained over the last few years, listing is actually quite an expensive business. It's money you could be spending on field work or actually getting drill data as well. And you're beholden so much to the market. So I know it's something
I have a question for Chen. This is a philosophical question. Is it the difficulty investing in a rights offering in Australia, is that an Australian issue, or is that a US investor issue?
That's a good question. In general, there's so much paperwork you need to go through that to get into the right offering, which is a very good deal for existing shareholder. But usually for people outside Australia, pretty hard to get. I mean, personally, I just having problem getting into that because of all these. Sometimes my position quite small, doesn't warrant that, but they're taking almost 50% off. It's not a pleasant thing. But for the existing shareholders, good way to support it. So that's become, and the United States always have this legend with all these, even in Canada, have a very big disadvantage, have all these paperwork to go through, clearance. So in the US, I would say the most disadvantage for investing in the US to invest in the junior space.
Yeah, honestly, I would think it's really more the protectionist type of strategies of the SEC and the US investment community that are causing that, because anybody in the world who wants to invest in a Canadian or Australian rights offering doesn't have a challenge except the US investor, and they make it very difficult for US investors to participate. So it is what it is. It's just unfortunate. You're playing kind of a global marketplace, but the US framework makes it challenging to do rights offerings.
Yeah, exactly. US SEC is US centric. So we just look at the United States. We want to quote unquote protect United States investor, but actually make our life very difficult.
Very true.
Well, thank you very much. So what do the panelists think about royalty and streamers as an investment? So Jim, I might ask you to start on that.
As an investor, I love it. It's great. And we actually just recently had a group called Elemental Royalties join Discovery Group, and we're super excited to work with Fred and Greg and their team. It's a really great addition, and it's something that we hadn't had before in our group. So as far as the investor goes, it's spectacular. There's very limited management time that needs to be focused on the actual operations of the mine, if not zero. You get all the upside. And if things go wrong, you just don't get paid. It's not like you have to spend money. You just don't get paid for that process. You get all the upside in exploration in terms of reserve growth or resource growth. So I love it. And we're happy to have Elemental part of our group.
That's brilliant. Yeah, I did see the news about Elemental. They're a great team. Anybody else have an opinion on?
Yeah, maybe I'll jump in, and because we've done quite a lot of work on this particular model, because it's very similar to what we do. We create opportunities for future royalties. And although the business has started to call it royalty generators, and we always come up with new names in our business, fundamentally, when you are a company that partners up, you are partnering for a future value, and that future value for us has always been the NSR. But if you look at it as an investment space, so there's currently about 25 companies that are calling, royalty companies, and they all have a little bit of a slightly different model. When you look at the generator side, and some of them tend to meld into each other, there's about 35 companies. So the space is getting very crowded very fast. This year alone, in the last 12 months, there's been 5 IPOs. So we took a really good hard look at, okay, how do we differentiate this market? Who is, what is the story and what is the thesis and the narrative going out to the marketplace? And on the senior side, and unfortunately, because the majority of the sector does not make positive cash flows, only a small subsegment does. You need to look at them from the top line. You can't look at them from a traditional price to cash flow or even price to EBITDA type of multiple. So you're looking at price to revenue. And when you start talking price to revenue, you have to justify growth. And there's some fascinating statistics that I'm happy to share, and we actually have on our website as we're trying to help investors understand not only our company, but the sector in general. So right now, price to revenue for the we've narrowed it down to only companies that have 50,000 revenue top line for a trailing 3 years consistently kind of get into that list, just in order to be able to have a real metric. And on average, they're trading at 129 times price to revenue. On an enterprise value to revenue, 110 times. So as Jim was saying, this is a fantastic market for investors to capitalize. But I think as this market matures and there starts to more players come online and they start to differentiate themselves, you know, I think investors will start to really ask the question, well, which one do I want to support and why? So for example, in the senior segment, and this is just the majors, and these are to be what we categorize as a large cap in the sector is anything that makes 100 million revenue per year for the last 3 trailing years. That group trades at around 26 times price to revenue when you do that subset. When you go into the mid tiers, okay, what's a mid tier? So we try and think, okay, well, let's say 100 to 10 million is a mid tier. You have to have that on a trailing 3 years in order to be in the mid tier space. That group is trading at around 70 times price to revenue, but their revenue on average has been growing at around 300% year over year for 3 years. So they are providing very high top line growth, but unfortunately as a segment, it's not cash flow positive. And then the juniors, I mean, this is a fascinating market. This is really where our forte is. Every group has to have a little bit of a different niche and a different way of generating that value for their shareholders. This group, 200 times price to revenue. So that's a staggering number. So again, from an investor point of view, I mean, investors are making hand over fist a lot of really good returns on this. And I'm really interested to see how, as an industry, we grow, how we differentiate, and how we show, you know, what is our value as a unique player in this particular segment of our space. So that's my 2 cents, very long.
No, that was fantastic.
But I've done a lot of work on this space, and it's I agree with Jim. It's a great, interesting spot to be.
I wish all my 2 cents were that well thought out. That was amazing. Thank you.
Yeah, and I would encourage, if you haven't been on Mundoro's website, it's definitely worth a little rummage around. It's fantastic. Right, we're into our last 10-15 minutes now. So we've had a question through which is saying, please can each of the panelists pick a junior mining stock? Who's kind of shining out to you at the moment? Chen, if I can start with you.
Chen, yes, hi. Yeah, one of the stock actually is on the Mine and Money. They just halted right now. It's Copper, and then they're going to announce a very important drilling results. Again, as all these Jim and Will, all these panelists say, the grade really important. It's the same management and Great Bear, which is 100 baggers. So this is the key drilling results coming out. So I would watch that. It could come out today. I just checked minutes ago. Still hasn't come out yet. The stock is halted. So.
Thank you.
Okay.
Willem, how about you?
Well, I mentioned a few names already. So these are probably the most exciting mature discoveries right now. But we have quite a large position in a company of which the CEO is present, Mundoro. And it always strikes me, if you look at Mundoro, it's not a one project company. You know, they have several great projects. They have several great partners in the industry. Major mining companies have teamed up with them. And after the huge run we've seen since March, and we just listened to all these rich valuations for the major players like the royalty and streaming companies, Mundoro Capital is now valued at 12.6 million. 12.6 million. I think the cash position is 5 million or 6 million. So you have an enterprise value of 10 million. And this is a great example that there's so much value to be found. And we're only in the very first stage of a new bull market, which could turn out into a generational bull market running for decades. And then companies like Theo's company, but there's several more, they still are potential 10 baggers or 30 baggers. It's incredible the value out there.
Thank you. That's really encouraging to hear. Michael, who's your
Yeah,
pick?
I like Reyna Silver. It's a good company. It was a spin out from Ag Silver. Good team. It's a story that I was recently introduced to, so we've done okay on it, and I think there's still going to be more upside on it going. Seems like Willem is also a shareholder of that company, so it seems like a good support. So, we always look for smart other investors on board with us there. But I think that could be a winner as you keep watching it. But again, it's a new story to us, so we're going to be keeping a close eye and see how the things are going to be developing for them.
Well, if I may add a little, because we're founding shareholders, there are not enough silver companies around, listed silver companies, so we created one ourselves. But if you look at the valuation for Reyna Silver jumped already to almost towards 100 million. So there's a lot of, compared to the story I just told, investors really have to check not how many shares are outstanding or what the share price is. They should look at the market cap and relate that to the quality of the projects, because we love Reyna Silver, great, maybe a great future, but they haven't been drilling yet, so it's getting a little rich.
Yeah. Jessie, can I ask who your current stock pick is?
Yeah, I would say Benchmark Metals. They have a gold project in Canada and with a very good upside resources, and also the drilling result is really positive as well. Another name I want to mention is Emerald Resources. So we have been investing in company like 1-2 years ago, and when they are in exploration stage, now the company is going to the now in construction stage, and we're going to production anytime soon. With the management team is really fantastic, extensive experience, carry the project from early stage to going to production.
Brilliant, thank you. Theo, can I ask, who do you pick? I don't know if you're allowed to pick yourself. Oh, you can.
We're not allowed to pick ourselves?
You can.
Well, I think Mundoro is a great, and thank you for that extremely well thought out explanation, William. I mean, we do a lot of hard work in order to create value for our shareholders, and we definitely think it's still extremely undervalued compared to a lot of our peers. But when I look at the space in general, out of like the senior royalty companies, one that is trading significantly below their peers is Osisko, 5 times top line revenue. I think that's one that investors should probably take a look at, Osisko Royalties, if they're getting into the space and they want to start with large caps and they want to start with proven cash flow, because this company is generating cash flow. That's one to look at.
Brilliant, thank you. And then Jim.
Perfect. I'll be self-serving and totally biased. And only because a few of your panelists I know are big investors in our groups. I would urge people to go to discoverygroup.ca, because the Discovery Group companies right now are well funded and all of them are allocating dollars towards exploration. So Chen mentioned Kodiak, and it is halted, and we are awaiting news. And it will be based upon the fact that that company put together a great team and was funded and drilled a great target. It's technically strong. Great Bear is a company in our group. All through exploration, value is added. And every single one of the companies in the group is now funded and going to be adding value through exploration. So discoverygroup.ca, and take your pick. As I said, we're commodity agnostic, we're quality focused.
Wonderful. Well, thank you very much, everybody. We've got time for one more question, and I think it's quite a good one because we've had a couple of people ask it. I'm a new investor. Well, I'm an investor who's new to the sector. What is the most common mistake that I should avoid? So quite a big one, but we've only got about a minute each to answer it. So Michael, if I can start with you, please.
Sure. I would really focus on the management, especially if it's in the junior space. It's a key component. Do your due diligence, see who the board members are, and of course the second part is see who all the shareholders are, if there's any connections. I think Willem mentioned there's a lot of them, at TSX with inside trading, so you should be really careful, validating, ask us, do a thorough due diligence as much as you can on that. That'd be my first recommendation.
Wonderful. Thank you. Jessie, can I go to you next, please?
Yeah, I would like to say the same. Management team is really important. A good management team can help the bad project go into like rock, and the good project or bad management team can go to the down. And also, I think the salary the management team pay for themselves, I think is really important to consider as well.
Brilliant. Thank you. Jim?
It's exactly those things. Just I totally focus on the people. Anybody, regardless if they're technical or not, or a newbie or an experienced investor, it's worthwhile reading all of the bios on the website, looking at them. Is there relevant experience, and have they had success? Because if you've got a string of 30 years of failure and ups and downs, why will this time be different? So look to the group. Is it relevant success? Have they done things? Do they have a track record? Because right now they're going to do well.
Brilliant. Thank you. Willem?
Well, I think valuation is most important, and it's very easy for people to get excited after a huge run, and then they buy into an exploration company already valued 120 million. And when you get a bear market, this one will go down probably 95%. But if you, if you have a real low valuation, like Mundoro, you know, there's huge upside when the bull market continues, and you have very, very limited downside. And most of the investors, they tend to buy high and sell low, but you should do it the other way around. Huh?
Yeah, definitely. Chen?
Yeah, actually, the management, the quality, how much inside ownership, salary, all these are very, very important factor. Most people already mentioned. Another one I want to add is the direction of the commodity. So I watch the direction very, very carefully, because if a commodity come down, then everything coming down. So for the investor, you don't want to buy when people pounding on CNBC say buy gold. You know, like when Warren Buffett was buying gold was over 2,000. You want to buy it when nobody was talking about, and then it's just about to take off. But I can tell you historically, if you compare gold mining company versus gold, this is the lowest we've seen in the past 20 years of the gold producer, just producer. So the producer would probably very likely have a big upswing that will lift all the junior exploration company in the next 12 to 18 months. I strongly believe that.
Yeah, absolutely. Thank you. I'm just wondering if Tio's still with us, because she seems to have frozen on my screen.
Yeah, I think so.
I'm here.
Oh, you are? You're there? Wonderful. Tio, yes. What are your thoughts?
I spent a long time on the sell side as an equity research analyst and on the investment banking side. And I've worked with all sorts of clients, institutional, high net worth retail, even small retail. And, you know, this is not an easy sector to invest in. It is very, very technical, especially if you're going to go downstream into the juniors. So if you're going to go down there, make sure, management and valuation, what William mentioned, absolutely 100%. That is something you've got to keep top of mind. Do not invest more than you can lose, especially if you're a first-time investor. And we always strongly recommend investing with known other investors. So whether it's newsletter writers and newsletter writers that actually put their money up front, or funds like Williams, that is a really good way to learn the space and watch what successful investors have done. You know, Jim brought up the point of see how management teams have created success. Look at how investors have created success, because not every investor is successful. So I would just say caution how much you put in, and start first with investing with others.
I think that's a perfect note to end on today. So thank you very much to everybody who's listening and for all the questions that you've sent in. I want to say a big thank you to all of the panelists. I think that's been really insightful. You've got such a wide breadth of experience and thoughts and opinions, and I found it really informative. So thank you very much to everybody, and enjoy the rest of your day.
Thank you.
Thanks, everyone.
Thank you.